We're going to talk today about different types of investments. And as a life insurance licensed individual, you need to understand not only the types of insurance products that you're selling your customer, but you also need to understand what are other types of investments out there that your customers can purchase or that meet the same objectives that they have. And until you understand what those other investments are and how they work, you're not going to be equipped enough to defend or to recommend to your clients the segregated funds that you are suggesting they invest in. So we need to have a general understanding of all the other types of investments. Now, this is not all investments that are out there, but certainly the most popular other kinds of investments that your clients can acquire to meet their investment objectives. And so, very simply, there are different types of investments that are available. We know stocks, publicly traded stocks. These are available on an exchange, a stock exchange. And so if I'm an investor, I can actually buy shares in actual public companies that are trading on a stock exchange. Stock exchange could be the New York Stock Exchange, could be the TSE, the Toronto Stock Exchange. There are different exchanges around the world where stocks and bonds are traded. And so other types of investments, stocks, I certainly can buy stocks. Now you, with a life insurance license, are not licensed to sell individual securities and stocks to your customers. Stockbrokers, people with their securities license, they can buy and sell stocks for their clients. Bonds, second type of category. What is a bond? Well, very basically, a bond is a loan. A bond is a loan where you, in fact, are lending your money. Could be to a government, as we know Canada savings bonds. Federal government is technically borrowing money from you, and they're giving you a bond, and they're giving you a promise that in X number of years, we're going to pay you X number of dollars. So a bond is a promise to you from someone you've lent money to. And so governments issue bonds, corporations issue bonds, foreign countries issue bonds, municipalities, the City of Toronto, the City of Winnipeg issue bonds. So bonds are basically, as an investor, you've decided to lend money to one of these institutions. And they're making a promise to pay you X number of dollars and X percent interest at a certain point in time. So that's a bond. Now, we can buy segregated funds that are made up of bonds. They're called a bond fund. We can buy segregated funds that are made up of stocks, a stock fund. And so these are all available investments that you can make available to your customers. Third type of investment, you're all familiar with it, I'm sure, a savings account. We have a savings account in a bank. A lot of banks will have a savings account that pays us very little interest, and some are introducing savings account called a high interest savings account. So if we have a minimum number of dollars in there, they're going to pay us a higher interest rate than in our regular savings account. So we're all pretty well familiar with savings account. Very similar to a savings account is something called a money market fund. Money market instruments are short-term investments, T-bills, could be a short-term corporate debt where companies are looking to borrow money, but for a short term, usually 90 days to 1 year. And so they're going to pay it back in that term. And they tend to give a decent interest rate on those types of investments, certainly better than you could get in a savings account. And so money market funds are funds that are made up of these types of short-term investments. The next item on that list is GIC, Guaranteed Investment Certificate. And GICs are available primarily from banking institutions, trust companies, some credit unions. And very simply, a Guaranteed Investment Certificate is a deposit that your client makes. They promise to pay X number of dollars of interest for Y numbers of years. And so you might have a 3-year GIC that the company agrees to pay you 3% a year for the next 3 years. And at the end of 3 years, it matures, you get your principal back, and the interest, you might have been receiving that interest each year for those 3 years and paying your tax, Or in some situations, you may have a compound product where the interest is reinvested for the next year. So you get interest on your interest. But you should all be pretty well familiar with a GIC. And obviously, mutual funds and seg funds, which are funds as we described, and there's certainly options available to your customers. Lots of variety in mutual funds and seg funds. They invest in all different types of investment vehicles, stocks, bonds, exchange traded funds, lots of different choice money market accounts. So we have a lot of choice as an investor. So those are basically the 5 main categories of investments. Here's some more that other than those 5. Exchange traded funds. You'll see the term ETFs. ETF is exactly what it says. It's a fund, first of all, but it's a fund that's traded on the stock exchange. So it's like a fund that kind of looks like a stock. It's traded during the day. It has a price at the end of the night, but it represents not one company. It will represent 40 or 50 companies. Or it may represent an index, but it looks and smells like a stock. With your life insurance license, you cannot sell an exchange traded fund. It's only sold available through the stockbroker marketplace. And so an exchange trade fund are grown significantly in the last while. They tend to have very low fees, and they, in fact, for people that are fee-based planners, a lot of fee-based planners who charge people X number of dollars to manage their money will use exchange traded funds as the investment vehicle. So again, it's a fund, but it's traded like a stock. Real estate, another type of investment which you're pretty well familiar with. I won't spend any time on that. Canada Premium Bonds and Canada Savings Bonds. Again, these are bonds available from the Government of Canada. So technically, because it's a bond, you're lending money to the Government of Canada. And the Government of Canada raises money that way because they use that money for infrastructure. They need to build a new bridge, a new tunnel, invest in a community. They will raise money from investors by issuing a bond. When they take that money, they use that for those type of investments, infrastructure, and then they promise to pay you back at the end of a certain period. So that's a Canada Premium Bond and Canada Savings Bond. A lot of your clients and Canadians might be able to invest in group plans from their companies. Company might have a group RSP to encourage them to save for retirement. It might have an employee stock plan. So again, group plans are another area where your clients could be investing money. The last item on that list is a tax-free savings account. Very, very interesting investment tool in Canada. Tax-free savings account, all the money you put into that account, it's not tax deductible, but all of the earnings that you make from the investments are tax-free. And so a tax-free savings account is a very interesting account, and a lot of people with money to invest will maximize their RSPs and then maximize the money they put into a tax-free savings account. The name is not really the best. It's really not only for savings accounts. It really should be a tax-free investment account. You can have all kinds of investments in your tax-free savings account. You can have stocks, bonds, mutual funds, seg funds, ETFs, real estate. So it's more than simply a savings account. So those are a summary of some of the more prevalent types of investments available to your investment public.